Thank you very much, Alberto, for these kind words. So I will talk about what we did in France. Not to say that it is replicable. I think every country has its own characteristics, but I can say about what we did. I think we're like most countries in Europe, perhaps with the exception of Sweden. We are stuck in a situation where we don't have private money and shareholders to invest in startups. And I think it's a kind of, I will crash open doors in saying that if a company wants to grow, it needs capital, and the capital comes from shareholders. So if you don't have shareholders, you don't have growth. So it's pretty simple, but I think it took a lot of time to be recognized as such. So what we said actually was to, in France, was to talk to the people that manage the big pocket of money. And in France, these are the insurance companies. They manage 2 trillion euros. That's 1/3 of French private wealth, so it's quite respectable. In other countries, it will be different. I mean, in the Netherlands, there is a 1.5 trillion pension fund, for instance. In the UK, it's 3 trillion. Whether this is at work or not is another question. But you know, where the money is quite different from a country to another. But for us, it was quite obvious that if we wanted to have quick results, we needed to talk to the insurance companies. I think one of the reasons why private money is not invested in Europe, with the exception of private wealth entrepreneurs that know about the topic and that are familiar with risk, is that the tech and venture were not or are still not considered in some areas as an asset class. So if it is not an asset class, why would you apply the 101 of finance, which is to diversify the portfolio in all existing asset classes? So I think because it's such an American sector, actually when asset allocators look at Europe tech, they say it's small. And of course it's small because there is, you have some role models like SAP or SML or Dassault System, Capgemini, but it's very, you do a quick walk to spot the big names. So because it was small and because they did not invest in technology in the first place, then they don't know the sector, and since they don't know the sector, they don't invest. So that usual vicious circle where people tend to, when they lose their keys, they tend to look under a lamppost because they are lying there where the keys may be elsewhere. That's the work we did, and it took some time to describe what technology is really about to people that don't want to act for the sake of France or for the country because it is not in their mandate. They manage money from savers, and they have a fiduciary duty. So in their to-do list, there is not save the country. It is make the best return for the savers. And because they didn't look that much into the US, they missed or they didn't pay enough attention to the fact that after all, technology was or is today 25% of MSCI World, that the Magnificent Seven, I think the average age is about 20, 25 years. So all that wealth creation has been missed by Europe and has been missed by many European investors. So I think it's quite important to take the time without any type of patronizing to explain what technology is really about and to explained that there are some agents that are good at deploying the money, and these people are the venture capitalists. And then there is another misconception, again in France, but that the performance of venture capital was insignificant, was very low. And that was due to the fact that I think the sector was polluted by tax-driven vehicles, where the savers were so happy to avoid to pay taxes that they didn't care about performance. So you have really two categories of funds: those who are not looking for performance, and those where you have a real professional. And the real professional, they have a good performance. And all the studies I've seen, for instance, from Cambridge Associates, show that over 10, 15 years, the performance of EU venture capital is as good, if not better, as the US venture capital. So actually, there are teams, but they manage very small money. And that, I think that is the reality of most of Europe, and that certainly was the reality of France 5 years ago. So what we did was to convince, and there was no tax break, no special favors, no punishment either. So we convinced 21 long-term investors to promise to invest 6 billion euros in two asset classes: late-stage venture capital and global tech equities. So why late stage? Because in most countries, and it was certainly the case in France, you have a good network of early stage people that can write 5, 10 million tickets, 20 million sometimes, but they are unable, because of the size of their fund, typically 100, 200 million, they are unable to come to the late stage rounds, which are done by US, or are not done, and then companies are sold to a US competitor, typically. So for us, having late stage funds, i.e. funds with at least a minimum of 300 million, was really the missing link. And why tech-listed companies, why there was no so much candidates for IPO? Because we think that the strength of the NASDAQ is not the existence of the NASDAQ, but the fact that you have hundreds of competent investors in tech that are able to place orders when there is an IPO. There are very few funds that are specialized in tech and that are able to confidently generate a ticket when an IPO takes place. And then you don't have IPOs, and you have trade sales, or you have IPOs in the NASDAQ. So that's why we wanted to help these funds to gather funds, to collect funds, even knowing that the candidates will emerge from the private equity pipeline in 5 to 10 years. But you need to create the competency before that, because it's not at the time when you have IPO that suddenly you are going to create funds that comes to the IPO. It doesn't work like that. You need to to create a track record. You need to collect money little by little. That's the way it's done. It has been done in the US, but in the US they started 40 years ago. So we have the situation that we know now with a lot of funds that are able to place the right value or market value at the time of the IPO. So this is what we did 5 years ago. I think the good, perhaps not a surprise, but I think to some surprise, but that the insurers invested more than what they promised. They invested 6.5, and in particular more in venture capital. And the reason why they invested more is because the funds, we set up a governance process according to which the funds were able to showcase their capabilities in a selection committee to the LPs themselves. We are not the people in my small mission that decide who are the good funds. We think that the investors are better placed to make that judgment because it is their money. So they select the fund themselves. And once a fund is selected, then the fund has to do the marketing job to have the LP write a ticket. So there is not a fund of fund. It's individual investment by LPs. And I think that's one of the reasons why it worked. It worked well. So after 3 years, when the program was over, we suggested to LPs to do another round, and they accepted that. I think the good news that we started with 21 LPs, and now we're 35. Everybody that came in re-upped, if you want. And we wanted to have more than insurers. We marketed, and we are still marketing the initiative to corporates and family offices, because for us it's a project of general interest, so it should not be restricted to finance. And so we have people like Électricité de France, Orano, Aéroport de Paris, Pfizer, which is a US LP, and we are very pleased with that because we think it should be, it has to be an international program. And Institut Mérieux as a family office, which is a leader in vaccines, a global leader in vaccines. So, and we have a pipeline of candidates. And that's very good for us because it's not only adding more money, but we bring to the conversation and to all the events that we organize for the community, we bring the market intelligence of people that are in the technology sector. And we think it's quite important to bridge, and that's the right place to use that word, to bridge the financial culture with the tech culture, and to make sure that people are not afraid by words or by terminology that indeed can be frightening if you're talking about biotech or deep tech, which is a key topic for us, which are key topic for us. So that's where we are at the moment. So we have an additional 7 billion commitment. So the total is 13 billion, 1.3. We have over 100 VC funds that have been homologated. They manage collectively 26 billion at the moment. Their target is 40 billion. We think that at the end of the program, we'll have 50 to 60 with the new candidates to come. We have 30 listed equity funds. They manage 15 billion, which is not a lot, but which is a good start. And they have participated to the few IPOs that took place in France. So we think that altogether in 2 years' time, there will be 60 to 70 billion invested in tech, which to some extent is, 15% of 1 billion. And if we could have 1 billion in Europe, I think that would change totally the equation, and that would encourage much more entrepreneurs to stay in Europe or to develop their companies in Europe and to have European shareholders, and to continue to develop IP and good jobs and solutions for our continent. So for us, it's the next step. The next step is not to, I say positively, before saying it's not to, so what is it for? It's to encourage other ecosystems, and since you all represent ecosystems, I think it's also a message for you, other ecosystems to develop their own solutions in bringing private money to the party. And we are quite happy to talk and exchange without coming with a model to be replicated. And for instance, we went to Germany, we went to Poland, we went to Greece. We have invitations from other EU countries, and we're quite happy to share our experience there. And I think we hope, and it is, the writing is in the wall now for those who we are not awakened when they read the Draghi report. We hope that every country will want to do something. Every country will want to have a tech ecosystem, because otherwise their country, I think, is deemed to be a museum or a lovely countryside for Chinese or American visitors. I think nobody wants that in Europe. So when gradually we think that more countries will come with a scheme, sometimes inspired by us, sometimes not. But I feel confident that we have a European platform, basically to do what we do at the moment, which is to connect those who have capital, and we want to invest it with the best returns, and those who bear projects with global or European ambitions, which I think is at the scale of the continent, which still has global leaders at the moment. The issue we have is that these global leaders have been created in the 20th century, sometimes in the 19th century, and when we look at the leaders of the 21st century, companies that have been created less than 30 years ago, what you see mostly is American and US firms, or some Korean firms or as well. But we are really falling behind on that front. And I think what is happening at the automotive sector at the moment is really the big wake-up call for everybody. It is such an important sector for Europe. To some extent, the car has been invented in Europe. It's so much ingrained in the European psyche and psyche, and the fact that, you know, the suburbs, the roads, all an economy has been built on that, it is at risk of falling apart by lack of innovation, or because many people falsely believe that the Chinese will only copy European success, but actually what they've done is leapfrog and start from the beginning on a totally new technology where they have at least 10 years, where they're at least 10 years ahead at the moment. It will be very difficult to catch up or to do something else. So that's that is our ecosystem, which is, I think, money, a very good network of funds. We think that 12 of our funds will manage over 1 billion by the end of 2026, which is the threshold to go to the Gulf, go to Canada, the US, and see the pension funds and the sovereign funds, and those who can only write checks above 100 million. It is diversified. We have a good knowledge network with good university or technical schools in this country. It is the case in other countries in Europe, and we hope that we will cooperate, we'll compete. I think competition is at the heart of the EU philosophy, but we hope that we can co-compete, I would say, and contribute to a better future for Europe. Thank you for your attention.